It's great to be here on the Yubi's program. This is obviously credit is a challenge, and I would say that a lot of things has been changed in the last decade or so. And we have, I'm with Perfios Software, and we've been working with the fintechs, banks, NBFCs, players for the last decade or so, and we have seen the change which has happened in the industry. So today we still know there's a large percentage of people who are not served with credit, but if I look at the transformation which probably happened in the last 10 years, there are a lot more people are getting credit today than they were getting earlier. And this again is credit in terms of having small ticket loans, whether it's a small ticket personal loan or it's a business loan. I mean, a restaurant wants to revamp their interiors. They want a loan of 2 lakhs. They're able to afford that and get it today, right? Or it is as simple as there's some people who are not able to be very financially prudent, and then they want their salary early. So you have players like early salary cashy, who gives you payday advance loans, right? Now, so in the next 20 or 25 minutes, I'll try to broadly cover what I see are the aspects and challenge and how do we solve for it. And just one more point before I jump into details is, see, credit is all about risk management. And ideally, you would want zero risk. And given the mindset, if you look at the part, right, obviously, a lot of people put money in gold and real estate and deposits, right? There are obviously adventurous people who have put in money in crypto, right? But then if you see the Indian behavior, it has been a lot towards being saving oriented and conservative. Okay, you may not look for as much return as you look for capital guarantee. In the same manner, from a financial institution perspective or a lender perspective, you also want to make sure that the capital that you give out comes back. So, which is where credit scoring is obviously a science that's evolved over several decades, and with more and more samples and experiences, it has been fine-tuned. Moving on. Yep, like the host talked about, right? Access to credit is still a large challenge. I mean, this is one of the recent report from TransUnion, where if still 50% of Indians do not get their credits are underserved. But what is interesting is, which is what is there in the detailed report, if you see it, this number was 50%, was 63% in 2017. So in 4 years, we have actually, or 5 years, we have brought down, we have had 12% of the population which did not get credit in 2017, getting credit today. I mean, that's a significant, if you look at it in terms of percentage, also 25% kind of coverage is a significant growth. So that way, I am happy to talk about the fact is, I think as a country, we are in the right direction. We are increasing the financial inclusion. We are making credit easily accessible. So this is about it, obvious, and the credit is basically largely what it's been. This obviously as a bureau like the TransUnion, CIBIL, Equifax, they get information from financial institutions who are lending, and then financial institutions take data from them. So it is from a confirmed data source of data, which is used to trust, right? So the bureau has been an institution of trust, because it is again a collective mechanism through which the participants in the ecosystem are providing information, and the other participants are trusting that. And even if you look at the bureau journey has been around 18 years. It started in 2004. It took a while before bureau data was available, where all banks were participating in providing the information. I mean, even as recently is when all the bureau players are getting all the data. So, and then in the Indian context now, in addition to the bureau, we obviously have information utility, we have CERSAI, and then we also have talks about public credit registry coming into play. So, from that aspect, bureau was one form of trust factor, which told us what is the reliability or the confidence that we have on the borrower that they would repay. It is, I mean, when you're giving money to someone, you expect to be paid back, right? So I think that's the first test of a trust. Moving on, traditionally, what data has been used in tradition? It is demographic. I mean, as simple as your identifier, name, gender, right, date of birth, location. Do you live in a rented house? Do you live in your own house? What is your experience level? How long have you been working? How long has your business been in operation? If you've been running a street corner kirana shop, how long have you been in the same address? All of this becomes demographic data. Then the risk data is obviously in terms of the bureau giving us repayment behavior. And also the part is not just the repayment behavior, you also get information about inquiries. Is this person looking for loans from multiple financial institutions, right? And finally the ability, right? How do you establish ability? Establishment of ability was largely based on your traditionally on banking data, based on your tax returns. I mean, GST is still relatively new. And then some kind of qualitative assessment that is done basis questionnaires. Now these data sources are like the bureau obviously has been there for the last 18 years. Banking has been there for a long time, but your even GST is just 5 years old. Income tax return and having income tax return being filed digitally and all those things is probably less than 8 years old. So which is the part of it? So these data have been used in decision, and here fundamentally has been two parts: ability to pay and intention to pay. I mean, that's the most simplest format. Then there are things in terms of identifying stability, in terms of looking at what is your money being spent on, right? And what is there a concentration risk for a business, and other things come into play. Now, as we look at the whole tradition, and as you look at the larger part of the country being covered for financial inclusion, for the underserved to be served, it is important for us to understand that there is a significant paucity of data. We have a population of 1.38 billion. I mean, you've done an amazing job of getting almost everyone an Aadhaar card. So which means today, your identity can be established to a large extent for every citizen in the country. Aadhaar has also been a journey of almost like 14, 15 years. If I'm not mistaken, the project started with the UIDI in 2007, but then it came to mainstream and other parts of it, and today it is ubiquitous. We talk about the Jandan Aadhaar mobile, right? Look at the Aadhaar penetration is 3.1 billion. Mobile penetration, okay. I mean, I think pretty much, I was reading some report recently, I think pretty much 80% of the population has some kind of a phone. And then you have obviously smartphones, which are around 700 million of the Indian citizens have smartphones, which again is a very interesting indication of affordability. Think of the fact that how much of the feature phones were there, your Nokia phones, right? 10 years ago. But today, if you're looking at the fact is 700 million users can afford to have a smartphone, which means that they're being able to pay anywhere between 4,000 to 5,000 rupees on the lowest end smartphone. Obviously, much more higher in terms of 10. So that itself is an indication of affordability. So on the JAM part of it, your Aadhaar is almost 95-97% coverage. Your mobile is probably around 65-70% coverage. Your banking is only 446 million. And even in that one, of that 446 million bank accounts, only around 170 or 180 million have credit history. So if you just look at the previous slide where we talked about traditional data being used for decisioning, which was your credit and savings history and financial. So for 50% of, or not even 50%, right? Basically 30% of the population, we have banking, some form of banking record. For just over 15% or 15% of the population, we only have credit history. which means that even though 30% population has banking, because there is no credit history, you could probably assess the ability to pay, but how do you assess intent to pay? So this is where the large part of the gap in terms of decision comes in. As we can see, traditional data is just not sufficient for us to make a decision. Is there a relevance of alternate data? Can that be considered? I mean, this was a Experience 2021 global survey where they done across multiple countries and financial institutions. And this report was specific to the US market. The part is, can our financial institutions, our lenders really willing to rely on alternate data? I'll come to the definition of what alternate data is. But so just to give you an example, right? In US, Experian has a product called as Boost for the thin file bureau customers. Experian leveraged the banking analysis and then looked at banking behavior to boost the score. So which meant that they were able to serve a certain percentage of consumers who were rejected just on the lack of bureau score. So if you see that part of it, so basically repayment, which was largely, or the intent was largely relying on bureau, got augmented with an alternate data, which is a bank statement, to quantify the ability to repay. As simple as this in the bank statement, if we are able to determine, is the person paying their rents on time? Are they paying their bills on time? Okay. Are they paying their insurance premium on time? Okay. Now they may not have loan records, but everyone has recurring expense. Right? Now, if you're able to identify what, this is how Experian did with Boost product, and that gave them a lift of around 7 to 8% in terms of qualification. The other part is, again, this is obviously still a small part of it, but then if you look at it, your certain segments, like, I mean, typically in the context of the Indian context, right? Most of the lenders have a policy saying that if the bureau score is more than 700, consider it. A bank will have it, right? And a bank might even say 750. An NBFC, large NBFC will probably look at 700. Now, obviously, some of the newer players started looking at coverage from a listing perspective. So they were probably operating between a 650 to 700 kind of range. Are there, but then at the end of it, it is still a risk behavior. And then there's obviously people who don't have a risk credit history would have a -1 score, right? Now, how do you determine risk over there? That becomes the challenge. Are there other surrogates of data which can be used for determining risk? So, fundamentally, especially in a country like India, right? I think in the last decade or so, there has been explosion of data. I mean, we have more data than we probably need. A lot of it has also been in the context of the government initiatives, in terms of many of the, I mean, whether it is in the context of e-governance, whether it's in the context of the RTI. Today, you have a lot of information that is available, which can be acquired digitally and which can be used as alternative information part, right? Just to give an example, right? Now all of us know, or as a lender, we have asked an employee applying for a loan for their salary slip. There are no standards. There is no central repository of salary slip. How do you verify? They can be tampered. Okay. In Bangalore, if you go to SP Road, you can probably get a salary slip by paying 30 rupees. Okay. So it can be fraudulent. EPF becomes a surrogate by which you can verify the salary or the Form 16, or even the fact that with the linking of the mobile numbers to EPF, there is people get SMS notification. I can read the SMS to say that fact, what is the salary? Similarly about businesses, right? Whether it is in the, I mean, what kind of a license does someone have? Is there if it's a restaurant, do they have a FSCI license, right? If they're a pharmacy, if they're the this thing, basically a drug manufacturer or reseller, do they have a FDA license? Or if they're an import export agency, are they licensed? We have a lot of public repositories, right? Um, as simple as this, you want to primarily look at credit information. I mean, can we use it from telco? We are able to get, with obviously user consent and participation, their recharge history. Or if it's a postpaid plan, what is the postpaid plan? Can that be used as a surrogate to estimate income? Obviously, on a very small loan. Your utility payments, again, utility payments can be used just like your, I mean, your telephone bill payment, your electricity bill payment, your water payments. Can they be used as surrogates to estimate a basically an income, right? But interestingly, a utility bill can be also the same data from the utility bill in terms of the address. So, which is where the same data set might be consumed in a certain manner, can also be used for other use cases. So that's where, if I look at it, there are several forms of data which is available. You also have in terms of the macro, you have industry and sectoral behavioral, you have agricultural information, and also as more and more partnerships are getting established. And the other part is, as financing is moving away from a branch, okay, to a point of consumption, whether it is in case of consumer or in terms of case of business. Your, I mean, like HUL is a program called Ashikar, which finances their retailers. And then obviously HUL has partnerships with a lot of financial institutions, banks, NBFCs, where they look at the vintage of the retailer, okay, and other aspects, their performance data and that their business performance data that gets used as a source to assess the income stability and other things, right? So now the government e-commerce marketplace, that's a program which got launched recently, where on a purchase invoice of 500 rupees or 50 lakhs, that information is being sent to lenders who are able to assess that and approve a loan. So now, if you look at this, these are not traditionally considered as data. Obviously, you had a certain segment of anchor financing. And even in terms of affordability, right? What is the kind of insurance policies do you have? Do you have if you look at your SMS data, do you travel a lot? Okay. Are you investing in commodities, okay, derivatives? So all this becomes information. So if you look at it, there are a lot more non-traditional data which is available today, which is what is considered as alternative, which becomes relevant in our process of making decisions. Okay, coming to the part is, can alternate data solve for paucity? Let's understand the psyche of the applicant, right? Fundamentally, stability determines that the borrower has a steady income stream, whether he's an individual, whether he's a professional, whether it's a business, small business, that they have financial stability. Financial stability can also be determined by repayment behaviors. Like I talked about, the fact is paying your utility bills on time, paying your rent, having the profile, right? Having the, I mean, one is identifying that you're paying insurance premium, right? But the fact that you have insurance premium indicates that you are obviously understanding risk and protecting yourself from risk. So that's an aspect on stability. Ability is primarily assessing the financial ability, right? Capacity to pay. What is your income? How much of this income is recurring spend? How much of it is discretionary spend? Now, are you overspending than what you have? I mean, just a classic example is, I was talking about the payday loan, right? Now, in a payday loan use case, from an ability perspective, I mean, the person has stability of income, but ability is they're probably overspending than what they want. But every time they're taking a payday loan, they're repaying. So which comes as part of your right? So it is just that even though they overspend, but they have a cash flow management problem, but as they get money, they utilize it effectively and then they repay. So there's an intention, right? Then comes the identity. How do we establish identity? Identity in terms of not just the address, residence, employment, okay, right? Lifestyle, family network. Now your voter IDs, from voter IDs, you can basically establish a family tree. Okay. Now the part is what kind of, what kind of industry are you working in? Is that industry stable? Okay. What kind of firm are you working in? Is that firm stable? What's the kind of value system that firm has, right? Or pedigree of your education, knowledge, all those things, right? Potentially, there are a lot of these things, like with the DigiLocker now coming in. Your school certificates are linked. Your college certificates are getting linked. Okay. Now, that can become information of establishing identity, but not just identity, it is also the trust of behavior which comes in. Then, another important is as you think about digital journeys, contactability becomes really important. Can I trace someone? Is that person someone who has a roaming connection, right? Prepaid versus postpaid. Who are his contacts? Okay. Is that location that he's staying in the same one? And then finally, most important is intention, right? How do we determine the objective for asking for a loan? How do we determine that the intention to repay, right? A person might be having money, but then they may not be repaying. As simple as this, does someone typically pay their rents late? Okay. Are they paying their utility bills, right? Transferring money to whether it's family, sibling, also, right? Erratic. Now, there is differentiation between someone who is erratic, unorganized versus someone who has intention to fraud. These things also can be derived from the alternate data. So again, this data comes into solving for vintage. With anything with age gets better, right? So that's where it is this thing. Employment, there are multiple forms of it. Intention, again, like we talked about, repayment behaviors need not just be loans, other parts of it. As simple as this, on an e-commerce transaction, how many times do you return the goods that you order? If you see this, some of the e-commerce companies have now started looking at those kind of patterns, and then they said, let's not do a cash on delivery because you incur a cost, right? Fundamentally, there's an intent that when I deliver the goods, you'll pay for it. So that intention is also another form. So which is what alternative of e-commerce spending behavior, right? I know the fact is, if you look at maybe in Bangalore, Ola and Uber is not the best example, but the number of times a person cancels a trip or a driver cancels the trip. Okay. This also becomes indicators of integration. Like we've talked about identity. Using the Vahan to identify the address. Okay. Right. That can become an address verification mechanism. Again, we talked about ability, again, multiple forms of data, right? Now, the traditional banking data, the tax data, GST. Just one more part, right? Just one of the interestingly, for businesses, they have e-way bills. How many of the businesses have generated e-way bills? So, which is where a fraud of, right? GST invoice raised, but goods never delivered. E-way bill becomes a mechanism to kind of cross-validate part. So, I think obviously there is a lot of things alternate itself. So, but fundamental problem of risk is still there, because a loan is, when a loan is given, there's a promise of repayment, right? And then as a financial institution, you have to obviously manage risk. When you're dealing with new data, how do you know the stability of the new data? Okay. And which is where we come to the part of a model development and model performance. In models, right? First part is data quality. Let's say you get data only, just to give you an example, right? Death certificate is available in 5 states only. If you want to use, now, is that an example, or a birth certificate document, right? To verify a birth. Now, is the data available in all states? Or second is, the data is available, but what is the quality of data? Just an example of, there's a lot of information which is pushed into some regulatory databases, but then they are not complete. Integrity, right? And then how does the data transform over time? Model choices, are these using theories which are established? Okay, if you're dealing with alternate data and the model that you're using is also new, are you increasing the risk of a model being inaccurate? Some models are based on things which have become obsolete. Okay, are you still using that one? Then modeling for uncertainty, scenario analysis. No one expected COVID to happen. Okay. But when the first wave came in April of 20, most of us did not know what to do. But when the second wave came in March of 21, or sorry, March of 22, right, most of us were kind of aware of how to manage the thing, right? Now, sensitivity. Are there things like, I mean, like as simple as this, there's food inflation all over the world because of the whole Ukraine war. I mean, that's now how does that impact? If there are businesses that are there in the whole, let's say someone who's making breads, right? Okay. Are they going to find a supply side constraint? So your model is how much of the sensitivity is the model taking into consideration? Is it taking a very wide range of acceptable norms? Benchmarking, right? Is that being compared with other established norms to establish, right? Model accuracy, again, how much of backtesting? You have built a model and you've backtested with, let's say, 10,000 homogeneous set of applications. Is that enough? I mean, just to give you an example, right? The application forms of a financial institutions can be in local languages. If your model is not being built for the fact that it can be in local languages, it should have come in your scenario analysis. Okay, and if you only backtested for application forms in English. Now, when you see a application form coming in vernacular language, your model will fail, right? So, which is where in the accuracy part of it, based on the scenarios and all those things, has enough data been created to test out this thing. Then there's also the whole time sensitivity of it. I mean, like with time, do factors change? Are there macro conditions because of which may bring in discriminatory behavior or variations, right? So that is where I think a lot of this thing depends on the quality of the model, the quality of data, right? If the model is flaky or the data is flaky, then obviously that's going to be much more higher risk in your decision. But and most importantly, see, today we have a lot of people who have built newer business models and lending and all things, but that's on a certain thing. I mean, if you ask an experienced CRO, he would say, I would want to look at the performance of the data over 3 cycles minimum, right? 3 to 5 years before I am confident that the model is consistent and predictable. Okay. So, which is where I think, how do you simulate? But then we want to build something quickly. Now, can you simulate aging of data? I mean, I know we've done this with face extraction, right? Basically, there are models which have been built to simulate a person aging and then taking that photograph and comparing that with the old photograph. I mean, like my photograph 30 years ago of my PAN card versus now probably is very similar, but it's not the same, right? So I think this is very important. So which is where when we look at there are enough alternate data, but when we think of the fact is using the model is very critical in the process. That is where we are able to, I mean, today we obviously see a lot of transformation in terms of the digital decision, where more than 850 data sources are there. Okay. In terms for businesses, verifying ownership pattern, looking at the statutory regulation. I mean, as simple as this, right? Intention. If someone is not filing their GST returns on time, if someone is not getting their director KYC update done in MC, someone is not paying their PF of their employees on time, right? These are all intentions. Now, is this intention not to pay because of financial inability, which is also a risk, or is the intention not to pay more of a behavior? That's also a risk, right? So that is where we look at the fact is now there's more and more data available, and this data gets relevant in terms of lead generation, onboarding, underwriting, right? Even refining policy. I mean, just the fact is there are so many new NTCs which are coming. Okay. Now, if a traditional lender wants to look at the NTC, they can look at the data which is being performance from the others in the market and then use that as a basis to make their policies, right? Finally, monitoring. Again, monitoring in terms of not just the part of for a business, right? I mean, as simple as this, a GST will give you the inputs on sales performance, right? E-way bill will give you information on how much of the goods is being delivered, okay, right? And so basically, then you're able to reconcile between the invoices raised versus goods delivered. Realization becomes easier. In terms of are there macro events? Okay, is the entity's directors having shareholding in some other company and that's under stress? Does that lead to this part of it? Yeah. So yeah, what we have seen is even today, with all the kind of data which is there are still being financing being done of Benami entities, entities, and all those things, right? I mean, as simple as this, if you look at a financial statement, audited financial statement, you can figure out because of lack of certain information whether whether it's really a going concern or is this basically just a pass. Same way, the whole thing holds true even for consumers in terms of the uh, demography, okay, financial intelligence, litigation, information available, ownership information. That is where we look at the part of trade information based on both traditional and non-traditional data helps you to build out behavioral aspects, right? Just to give an example, right? All of us know UPI volumes have been increasing. The quantum of the amount transacted may not be high, but the number of transactions is higher. I mean, as simple as your nearby Kirana store. Okay, and recently I was having a conversation with a set of folks in US, and I said that the early part of the week I traveled to Mumbai and I forgot my wallet, but I had my phone. They were surprised that I could do all my payments just using my phone without my wallet around, right? In that form, but now if you look at the UPI transaction, right, you can even understand merchant behaviors. Which are the merchants with whom we are transacting? So, which is where what we have seen and lot done is basically using the enrichment engine to build out these combined data and then basically building risk and decision models that can be consumed. I think I'm going to be out of time. So, but what we see is data is pretty much available for all. Data is very relevant. Digital data is very relevant in every industry, whether it is remittance. I mean, as simple as this, for remittance, you have to figure out whether this individual is an NRA or not, right? From your tax filing information, you can find that part of it. So from a banking statement, you can find some parts of it. Similarly, in insurance, AML, okay, right? If you want to do such a insurance, right? Wealth, lending, neo banking payment. And every stage of a customer life cycle, all the way from sourcing, onboarding, verification, fraud, underwriting, servicing, monitoring, collection. So to summarize, we have seen a lot of data, and we have also seen, like I talked about in starting, more than 12% of the population which was not being served in 2017 is today served financially. And all of this has been possible because of the amount of data which is out there, the amount of use of technology, and obviously the models. Models obviously take time to this thing. We also seen challenges in terms of the risk, NPAs, and I think that is where some of the things which the regulators are bringing in. It is to strengthen the process and make sure that many of the initiatives on the new age lending continue on the longer run, right? Which is where I think the model strength becomes very important. And that is broadly. And a bit about us. I represent Perfios and Karza. We are a category creator for digital decision and for the entire customer lifecycle. Work with 800 plus clients. On an average, find 3% of applications fraudulent. 2,000 plus data sources, 30 million API calls per month. Okay, 90% of digital applications goes through our platform, and we obviously increase the efficiency in the process. Okay, both in the lending onboard and also now in the insurance thing, right? Significantly. That's pretty much it, and thank you.